ladies and gentlemen, children of all ages. Welcome to the Equity.Guru Investor Roundtable. I'm Bobby down here in the basement with my friend Galen. He's over there making his favorite NFTs. He loves NFTs. Actually, he hates them. Vishal is in the upper corner over there. He's the chart attack master, and the guru himself right upstairs, living large in the penthouse, waving, feeling good.
In the office, COVID-free.
Feeling Chris Perry, being Chris Perry. That's TV. That could be a TV show. We're going to talk about oil and gas. It's a mini roundup today. Fantastic forever type industry thing, but it's always changing these days. Crude Energy, CR on the Toronto Exchange. CJ on the Toronto Exchange is Cardinal Energy. Our friends at Southern Energy are SOU on the venture. And then there's also Ensign Energy Services, ENSIGN. ESI on the Toronto Exchange. Galen is the author of our comprehensive and delightful piece that accompanies this video on the Equity.Guru site. So therefore, Galen will speak.
Sure. 2020 was a real crappy year for those that were in the oil and gas sector. It was unfortunate, geopolitical tensions, the OPEC wanting to crush American production infrastructure, which they managed to do. Saudis can make oil work for them. Yeah, well, you know, they can make a profit at oil at $25 a barrel, whereas the American and Canadian infrastructure required at least $45, $50 a barrel to make things work for them. And so they put the squeeze on. We even saw oil futures drop to zero at one point during that period. And holy crap, the industry just went to crap. They ended up submarining probably about 50% of their labor force, killing all sorts of wells, moving away from exploration, and just trying to keep the dam from breaking on them. So basically,
it was the end of the oil industry.
Yeah, exactly. People saw at that point as going, okay, it's ES or not ESG. It's a new energy era. We're getting the electrical coming in. We're getting solar happening. Wind is going to take over. Hydro is going to happen, but not. Because basically what we've failed to understand in this, I don't know, feel-good transition, I suppose you could say, is that the oil and gas feel good. The oil gas
fuel good. Oh, sorry.
Oh, okay.
Fuel good.
Okay. What we failed to understand in all of this is that the oil and gas industry is a necessary component to society. It's not something frivolous like big tobacco. It actually has a service that it provides that we desperately need, meaning how are you going to eat? Where are you going to be able to get yourself to other places? And the plastics. Petrochemicals are a huge manufacturing product that are not easily replaced. So this will be around for a while. I'm not saying
Paper straws suck.
Yeah, exactly. They can fall apart in 5 minutes.
Like you would think that they'd figure out how to make a paper straw that doesn't fall apart in a coffee.
One would think they could use some sort of glue or something to hold it together.
It's paper. It gets wet.
Yeah, it does. I don't know. Make them out of wood, like something.
Yeah. Papyrus has lasted forever. Why can't they make paper straws
well,
like that?
To be fair, I think if you put the Dead Sea Scrolls in a Tim Hortons double,
you're going to taste sand. All right. So anyway, we're in a new era right now. People are beginning to realize what's the importance of oil and gas is, and that it isn't going away anytime soon, that the promises made by Elon Musk and a bunch of the other rainmaker capitalists in charge of the EV revolution, it ain't happening as quickly as we would like. That's fine. It's just settle into your seat and realize what's actually happening out there right now. So basically, in the year 2022, we've got a changing face to the entire industry. Companies are now looking more at ESG guidelines, which is your environmental sustainability guidance. They're looking about taking care of their stakeholders, meaning the people that live on the property that they're actually trying to get them resources out of. We're being a kinder and gentler raper of the earth. Yeah, whatever. You know, it is what it is, but it also is, you know, it's a necessary thing. Regardless, we're going to have differences of exploration, people trying to find new ways to lessen the impact of the environmental footprint that they're putting down. There's also going to be using their ESG guidelines to play a larger role in their M&A acquisitions or transactions. M&A being merger and acquisitions. This is how the industry survives, through consolidation in times like these. People are buying other people up for their assets. The business models are going to shift so the companies are more prepared for the clean energy transition. It is going to happen. I'm not saying that it won't, but it's just a little bit further down the road and requires a bit of an easier kind of a change
Ranking?
from one to the other. Yeah, exactly. An easier
Like more
ranking.
Bill Cosby, less Mike Tyson.
Yes, exactly. Oh, jeez. All right. I guess
I
I,
mean,
I opened that. I opened it up, didn't I? All right. Now, I want to talk about 4 companies, not the big guys, because you're not really interested in them. There's not a lot of growth opportunity. I suppose in some sort of blue chip retirement thing you can look at, but you can talk to your investment advisor about that. Companies I'm going to talk about are Canadian-based. They're all under the $1 billion price. They're doing really well right now because the WTI crude prices is up over $80 a barrel. And natural gas prices, because of things going on in Russia at this point in time, are doing nothing but going up. And we're going to see more of that happen as inflation hits and, the world gets a little crazier. So, companies I want to discuss, first off, let's just take a look at this. First company up to bat is Cardinal Energy. They're working out of Western Canada. They've got properties in Alberta and Saskatchewan. They've got millions and millions of barrels of proved and probable. Now, proved, of course, is what they can find and say is actually there. Probable means that, yeah, we're pretty sure it's there, but we don't know for sure yet. But they've got lots of light and medium oil, lots of heavy oil, natural gas liquids, and also conventional natural gas. Natural gas liquids and conventional natural gas are the items that are going to be taking us through to the clean energy revolution. Those are our transition fuels. So there's a lot of focus on those these days. Now, the company itself, the grand net present value of everything that it has being proved and also developed and producing, because they've got products that are not producing yet. This was priced out at $50 a barrel in 2020. So it's actually way more than it was then. But they said $950.17 million. So you can imagine at $80 or $89 a barrel, that's about double that right now. This company, which is wholly different from the tech sector and most burgeoning sectors that we see today, has a price to earnings ratio of 1.98. Oh my God, that is a rarity. Revenue for the company during Q3 2021 was $120.01 million. And it brought home comprehensive earnings of $262.33 million. Now, you're going to say that doesn't make sense, but that's due to a $218.34 million impairment reversal. An impairment is a company that sees something that's going to lose money in the long run, and basically they just write it off on their books, and they call it an impairment. Now they've reversed it, so it means that they're back to business. During that period, they made $1.64 of earnings per diluted share, which is big for a company. So shareholders at Cardinal did quite well this time around. The company currently trades at $5.04 per share for a market cap of $759.65 million. Next up is Crude Energy. They're a natural gas producer focused on developing properties in the Montney Play located in northeast British Columbia. They have a large contiguous land base. Now, contiguous means that it's all in one piece, of over 264,000 net acres. That's a lot of property.
I was guessing 250. 263?
264, in fact, even more than that. Now, only 19% of that property has assigned resources to it, meaning that there's an 81% of that land has exploration value. And less than 1% of the lower Montney lands have assigned revenues at the end of 2020. So this is a pretty big opportunity for this company. Now, they already have 2,000 drilling locations which they've identified so they can get at within their land package. Now, the company brought in $176.2 million net income for for the third quarter of 2021. And this is also due to everybody's doing the reversed impairments these days, $228.5 million reversed impairment charge. They do, however, and this illustrates just how much this costs to do exploration and development for these companies. They have a $404.1 million in net debt as of September 31st in 2021. However, with this debt, there's no covenants or repayment requirements on $300 million of that until 2024. So they got a bit of dancing time for somebody comes knocking for their money. Now, Crude Energy currently trades at $3.34 per share for a market cap of $519.14 million. Next up is a company that actually provides services in comparison to actually providing product. Ensign Energy Services is a Canadian-based oil field service provider. They operate in Canada, the U.S., Latin America, the Middle East, and Australia. Talk about coverage. Our portfolio includes all sorts of drilling, contact drilling, directional drilling, underbalance and managed pressure drilling. They have rental equipment, they service wells, and they have production services. They do the whole thing. So they step in when a smaller company, for the most part, needs work done, and they can make that shit happen. Okay. Now, over half of the company, and this illustrates the shift in the production focus over these last few years, over half of the company's fleet is drilling for natural gas. Everybody's really trying to get onto that transition stage. They have 50% of their fleet in Canada, 36% in the US, and only 14% international, which means a lot of it's on friendly territory. They have 20% of women in director or level or higher positions. Again, this is the ESG guidance of these companies is really improving. Their metrics for executive compensation include safety, which it never really did before, financial and strategic targets, shareholder return, and return on capital employed. Now, that's a pretty good thing, meaning that they really have to spend their stuff well and have a good return on it. And, it's not typical that this has been put into place. So it's an interesting concept. Revenue for 3 months ending September 30th of 2021 was $268.58 million. They did, however, have a net loss of $34.38 million during that same quarter. Expenses are decreasing, but they really got hit hard by COVID. Most of their operations, because they're not actually producing anything, got shut down. So they didn't actually get to bring in any kind of real revenue during that time period, unfortunately. But it does seem that they are well on the way to recovery.
That's pronounced Ensign?
Yes. And they currently trade at $2.24 a share for a market cap of $365.4 million. Last up, and it is a beauty as far as growth potential is concerned, is Southern Energy.
And we must say we work with Southern Energy.
Absolutely. They are a client, but I'm really glad they are because it's good to talk about people like this. The company is a Calgary, Alberta-based oil and gas producer, but here's where their kicker is. They operate in the southeastern U.S., primarily in the Mississippi interior salt basin, which is a hugely prolific natural gas zone. 97% of the company's licenses contain producing wells. So they're not messing around. They require no additional drilling or operations to maintain their existing interest. So they're just making money at this point in time. They've got all sorts of potential exploration that they can do, but they don't necessarily have to move on that, which is quite heartening considering that this is a relative explorer, if you think about it in that term. Now, their proven net present value at a 10% discount right now is $38.9 million. Now, you may go, well, that's not a lot compared to the others, but look at it this way. Their market cap is $35 million. So, hey, their revenue for 3 months ending on September 30, 2021 was $5.22 million after they paid out royalties, meaning they made money. Their comprehensive income for the same quarter was $5.77 million. This company trades at 45 cents a share. There's a huge amount of potential within this company for growth, and it trades very close to the Henry Hub, meaning that it gets revenue very easily at a premium level. So,
Southern.
Yep, Southern Energy.
SOU on the Venture Exchange. Chris Perry, you want to start with thoughts on them?
What he said.
Exactly.
No, I'm going to start on Cardinal Energy. Look, I know that a lot of people out there are like, oil and gas. I don't want to put on oil and gas. It's raping the planet, as was said. Listen, oil and gas is not the devil, right? Like, oil and gas is dead dinosaurs. It's underground. It doesn't do us any favors staying underground any more than it does, at least above ground. We can do something with it. What we don't need to necessarily do is leave the planet looking like while we're doing it. So, the whole environmental responsibility side of things is important. If you're like me, would like to not drown in thick, gooey muck with a rising tide of ocean and
Chevron
flames from the sun.
Chevron.
So the environmental social governance side of Cardinal is interesting to me in that it continues to be, not aims to be, but continues to be a net negative emissions company. Through carbon capture and sequestration, they've sequestered about 152,000 tons of CO2 this year so far, according to financials out of actually last year to November. So that's a shit ton, if you'll excuse my French, but I believe that's actually a technical term in the oil and gas trade, of responsibility. These guys, I think Galen said that $25 a barrel was what the Saudis managed to get things for out of the ground profitably. Third quarter operating expenses for this company were around $23.53 a barrel. So, they're getting it out of the ground. They're getting it out of the ground relatively inexpensively in a market that is paying a premium, and they're doing it without leaving the planet drowning in blood and goo. So that, to me, is interesting. And also, if we take a look at the stock chart, not a bad little rise going on there. I don't think they're necessarily chasing here. This is just a good, solid company doing good, solid things. Now, on the fundamental side, look, it's an $800 million company. In order for me to double my money, they have to do some seriously good things. So I might have a little play at this at this larger scale deal, but it's not really my jam as an investor. But I will say, if you're looking to fix the oil and gas industry, being on the outside of it and waving a placard from a plastic kayak is not really how you change it. How you change it is you buy into the industry and you act as a shareholder on the inside. I will say Crude Energy has a very similar looking chart. Perhaps this one is a little bit more mature as a company, I would say, but I'm not a big fan necessarily of companies that only earn money every now and then. These guys have lost money, $200 million, then they earned $1 million, then they lost 23, then they earned 176. It's a little bit all over the place for me. For a large oil and gas producer, I want to see some stability there. Although that share price is rising, kind of seems to me like maybe it's a sector rise more than a corporate rise. I will say, though, that I am so uninterested in Ensign Energy that it's like an ex-wife. If I go through the last year of news, just financials, loses 79 million, loses 43 million, loses 52 million, loses 34 million, and extends maturity of a $900 million credit facility. This is a $300 million company with a $900 million credit facility. Admittedly, their industry took it in the ass. When oil and gas goes down, oil and gas services goes down harder and faster than oil and gas proper. And so coming back from that, you'd expect them to be hitting the all guns blazing. They're definitely doing some business, but are they making money doing it? Not quite yet. And so I don't think that there's really a model there that makes me happy, considering how oil and gas is shooting the moon right now. This is not a section of the sector that makes me want to put money in. Now, Southern Energy is more my jam, and I say that with the conflict, obviously, that they're a client. But this is a company that, on the fundamental side, is a $35 million market cap, right? It's a company that's pulling oil out of the ground. It's a company that rolled back shares recently to get itself set up. It's done some shares for debt. Directors are acquiring shares. It's issued debenture holder shares. So there's a lot of fixing this thing up that's been going on. And frankly, before that even happened, it was earning decent money, raising decent money. It's $15 million financing, $10 million financing. This is a company that looks like it's doing all the work to be an overnight success for the last year. It hasn't always been a good deal. The properties that it has are good. In the midst of oil and gas being worth nothing, it was admittedly losing money, but not a lot. And right now, quite frankly, it looks like a success story in the making. Look, it's only little. It's not a massive deal. If things go poorly in oil and gas, this one will take it in the head more than, say, a Cardinal will. But I'm not expecting that all of a sudden we're going to go back to $30 oil and gas. I think that we're up where we are for a while now. The oil companies have figured out that if they raise prices a little bit at a time at the pump, instead of 20 cents a gallon at the pump every other week, that we'll eat it and keep going. When they've had like big rises in the past, people have just stopped driving. People have taken buses, bikes, and switched over to EVs. So the oil companies, I think, have figured out that if they're going to raise their profitability, they need to do it in small increments and sell more taquitos rather than just bidding the Christ out of us at the pump. Southern Energy, to me, has the most to offer for an investor that wants multiples, because it only needs to do a few things right, and it looks like it's doing them in order to take that 32 million to 64 million to 96 million, and that's a 2 times, 3 times for me. So of the 4, that's the one I'm looking at. I think Ensign, I'm really might come back in a year and see what they're doing with the money borrowed, but the other 2 are just good, solid. Stick the RASP in, then they're going to make money for a couple of years. But I will say this. Sometimes people say to me, hey, what can I put my money in for the next 5 years and just not look at it? And the answer is nothing. 5 years ago, these oil companies were worth billions. And then all of a sudden they weren't worth anything and oil was being given away on the exchange. You just can't invest your money in a sector and leave it there anymore. You've got to be a bit more active. Sectors are being continually undercut by free options. You know, the hotel industry's gone to Airbnb. The taxi industry, when's the last time you caught a cab? It's all Uber now. You know, every industry, Kodak has been switched to digital film. Like every single industry, QuickBooks has taken out the accountants. Online law firms have taken out the lawyers. Not all the lawyers, unfortunately, but yeah. So, you know, investing in oil and gas doesn't mean you put it in your RSP and you forget about it anymore. You need to put it in and you need to monitor it week by week, month by month. If you're monitoring the oil and gas industry and you watch it for the next few years, I think you're going to see appreciation in all of these stocks.
100%. Michelle, you're going to whirl us around the actual ups and downs here.
Yeah, a lot of charts here and a lot of things actually to talk about, guys, about oil. My take is actually a little bit different on the fundamentals. Like, you know, there is a lot of the geopolitical talks and risks that people are talking about, you know, obviously with Russia and Ukraine. There are then some saying, oh, it's, you know, with the economies are booming, but the Chinese cut interest rates 3 weeks ago, their economy is slowing down, which usually is very negative for oil prices as a whole. But as you can see from the chart, and this is a daily chart, oil has just been going up in a straight line basically since December of last year. Something, you know, we called actually over on Equity.Guru with the support at $65. So my take on oil, and some people might not like this, but you know, I'm thinking oil is going to be hitting $100 to $120 a barrel, and you're running into oil because you want to be in commodities for the actual inflation trade. And it's going to be driving central banks nuts because obviously as oil prices increase, it means the prices of everything else increase, which adds to inflationary pressures, which the central banks can do nothing about. So it's going to be a pretty crazy time. You know, it's not just me. There's a lot of major banks saying we want to be in the commodities for the inflation trade. And we are looking at 120 a barrel oil by the end of this year, according to some of the big banks. But I'm targeting $100, maybe by, if I'm really bullish, I would say maybe by the end of March of this year. But I do think we might see $100 a barrel by Q2 of this year. And, you know, obviously that does mean I am bullish oil. However, I would say right now, I think there is going to be an opportunity for a bit of a pullback in oil. And I'll show you why here. I have the weekly chart of light crude oil. So this is, of course, CL. And I want to zoom out so you guys can sort of see where we're at. We're literally at levels that we have not seen since 2014. And I have a really big resistance zone on the weekly chart, actually right where prices are rejecting right now, which is pretty much at the $92 a barrel. So we actually did cross over $90 a barrel last week. So I'm looking actually for a bit of rejection here, and I'll draw this out for you guys, but you know, you guys can read about it too in my article. But I am looking for a bit of a pullback here in oil, which, you know, we'll talk about some of these charts, but I do think that will give us an opportunity to get into some of these oil positions. And then from there, I am looking for that big move up And unfortunately for some of the people in the middle class, I guess, we are going to go see $100 a barrel, which is, as I said, going to be adding much more to the inflationary pressures here. And, already stocks are moving. I know, Rob, you're not a fan of Chevron, but they've just made all-time record highs just 2 days ago.
Not
so,
surprised.
Yeah, all-time record highs for Chevron. If you look at some of the big oil companies like Chevron and ExxonMobil, Chevron actually has probably the best balance sheet out of the bunch, and they are sort of now looking into things like geothermal and also renewable sources. And as Galen mentioned, right, these balance sheets are really bad because of the fact that when oil prices fell years ago, a lot of these companies had to borrow from the banks because they can't just stop pumping oil because obviously it means a lot of people are going to be unemployed. So you had governments essentially basically on their knees begging for the banks to loan money to these oil companies, which the banks didn't want to do. So now when oil goes up, bank stocks go up as well because banks are now actually heavily involved in the energy sector because of all the debts that they basically had to give to these oil companies to prevent massive layoffs that governments didn't want in mostly America and in Canada. Watch Chevron here because this breakout is quite important, but there's also XLE that a lot of people are watching, which had a nice run. But as I said, I am looking for a bit of a pullback here in oil before we do continue higher, which is going to be, it's going to be playing a role in some of these charts. As Chris mentioned, Crude Energy and Cardinal look very much alike. They've had a long uptrend here, and I've drawn out these sort of wedge patterns or channel patterns, you can call it. Big red days today because oil is also falling back today. So Cardinal and Crude were down about 5 to 6% for the day. And if I'm correct in my assumption of oil prices taking a bit of a drop lower, I'm going to be looking at around, the $2.80 zone here for Crude Energy. And for Cardinal, I've drawn it out here. I'm going to be looking at around that $4.50 zone, which I think is going to be, great opportunities for people who want to play oil long, because of course, if oil moves higher, the entire energy space here is going to follow along. Ensign, let's talk about Ensign. And again, very different looking compared to CR and CJ. Very big resistance level here at $2.30, which we've actually been trying to break out of multiple times here since mid-January of this year. You can see the sellers just keep piling in, and they will not take, or they will not allow price to break above $2.30. So obviously, if I'm correct in my oil assumption, I do think prices here are going to be rejected, and we will be pulling back to around the $1 zone. And then from there, with that takeoff with oil, perhaps we'll have enough strength to take us above this $2.30 zone. And then finally, Southern Energy here. Last time, I believe we talked about them, we did highlight this wedge pattern, which we actually did break out of. But as you guys can see, Southern hasn't necessarily followed along with all the other energy plays in terms of, the big moves that they've made. The volume is, not as much as the other stocks, although today we did have a pretty decent 207,000 shares traded. But, as Chris said, I think this one is very interesting, just given its market cap and basically the future growth potential if you're bullish this sector for the long term. And I would be looking, if oil does fall, I don't think Southern will fall quite heavily with the other stocks. As you can see, didn't really rise as much as the other stocks did when oil was, tearing. So I'm looking at this 37.5 zone here. It's a really big support zone. So I would love to see, maybe prices fall back there if, again, if oil does fall as I hope it does. So basically, to summarize everything, I'm bullish for the long term for most of these companies because they all will follow what oil does. But right now, I think if you are going to put your money on the line, I would just be waiting a bit on the sideline for a bit of a pullback here in oil before piling in for the next jump up to triple-digit oil prices, which we might be talking about in the very near future.
That Ensign chart was unbelievable. I mean, it looked like the greatest roller coaster ride at any amusement park. like that.
There we go. Yeah, down, up, down, up.
I tell you what's happening there. Someone's trying to get out of their position that was sizable, and they're not prepared to wait for anything above that price, but they're prepared to take less. But that's my thinking, is someone's unloading a big old stake over a long period of time. And the moment they finish selling, they get to a point where it's not worth it to them anymore. It starts ticking up with the sector, but they're not going to let it run because they want their money. I will also say that on that Southern Energy chart there, Michelle, if we draw a line from the beginning of the year to the end of the year,
The beginning of this year or 2021?
I can't see because I'm blind, but if you're that low,
Right. Okay, I see what you're
to
saying.
where we are now, like that's a nice line. Take away the ups and the big ups and downs, because there's promotional stuff happening, there's all sorts of things going on. But to me, I think that looks like a long-term solid up. And obviously you take it back far enough, it's a down. But to me, I like to look at what's happened over the last 12 months. And I think that they're better than they were. They've done a little work. There's clearly been some promotion, some increase, and the people that have probably there for a while, that maybe had been through the 2 year ago drop off, probably happy to get out of their position. You see the top extended out over 2 months. There's definitely a lid there, and so to me, someone had a point to make and was like, if it hits this price, sell. That business there, I think you disregard those months and you look at it over the long term, and that's a good solid rise up over 12 months that I think is going to continue.
Let's jump back to where we started with Galen and find out what kind of do-si-do he might be spending today. He got $7,500.
Vishal has a good point. There's potentially a clawback coming for oil prices. Now, it all depends on how you sit as an investor. Do you want to wait and possibly miss, but wait and see if you can garner more of a product, or do you just want to get in now and ride out the low? Now, as far as I'm concerned, on let's say Crude and Cardinal, I would probably drop about $1,500 per. It would be an RSP play, and then on the Southern Energy, I'd get a little more ballsy with it, and I would make sure that I could afford to lose $4,000. But if I could, then yeah, I can see that this is a really interesting play. It's making money, and it shows all sorts of upside, and it will produce at least for the next little while, right? So I've got no worries as far as like, oh my God, is oil going to come out of the ground? No, I don't have to worry about that. So that is a total of $7,000 coming out of your pocket that I'm investing into my life.
Bam!
Yep.
There we go.
All right, Chris.
When I go fill up my car, my little peppy little fuel guzzling car, when I see prices come down, I think to myself, this is going to hit the oil and gas market in a week or two. But you know what rarely happens? Me seeing prices come down. Right now, prices are up 10 cents over what they were a month ago, which is 10 cents up over where they were a month ago, and they don't show any sign of abating. Yeah, there are a lot of people that are buying Teslas, but the Tesla doesn't do so well in the cold weather, so that takes out half of Canada. The other EVs are, largely hybrids, still require the oil and gas, and those that aren't are still on the drawing board. So for me, you've got at least another year or two before oil and gas starts to find that point of like, well, what else can you do with it? So right now, I'm doing a rare thing in that I'm going to be trading your money, not investing it. I think that Southern Energy right now is doing about $100,000 a day in volume. If I put your 7.5 down at 9 a.m. on that bad boy, I set off a triggering effect for the day and move that thing up a few cents. Maybe continue that roll that's been going for the last month and a bit. That's taken it from 24 cents to double that. A double in a month, I can have that. I can do very nicely with that every couple of weeks. And so that's where I'd be putting your money. I might throw 1,000 into Cardinal because I don't think it's ever going to be worth less than 1,000. Even if oil prices come down, I don't see them coming down to $30. I think they'll come down to maybe 60, and then there'll be a reckoning and some acquisitions and belt tightening. But Cardinal's not going to lose on you. Ensign, I don't think. I think there's just too much muck to push through on them. But I think Southern Energy, I've got a soft spot for the micro caps. I think that's where you really make your money on a trade. And I think that you can be the bully at the table with enough cash and be the master of your own destiny with the Southern Energy.
That brings us to Mr. Bull, Michelle.
Yep. So I'm similar here to Chris's approach. I think this is one for a trade just because of the market conditions right now. So obviously, I'm looking for a bit of a pullback there in oil. So I would just be sitting on the sidelines for like a Crude Energy or a Cardinal Energy just for now. But I think it's important to have some sort of producer in your portfolio, whether it's one of the big boys, maybe even like a Suncor or someone else, or a Cardinal. I think if you want to play the oil trade for the long term, the best way is to have at least someone that's producing, just because the stock has a good correlation with the price of the commodity itself. But if I was to act right now, it would be Southern Energy. That's where I would be putting my cash in, and I would be putting in $3K at the zone, just because of all the stuff that Chris has basically said in terms of the market cap and the opportunity going ahead. And the price here, I think, again, it didn't really rise as much in tandem with oil, I would say, in the recent few months here, but it's been moving in a nice upwards trajectory. And I just hope if that pullback does occur, the same will happen on a bit of a brief pullback for Southern Energy. So I like the price area right now, and I know my chart here is now littered with all these trend lines here, but you could sort of see here that this zone at 37.5 is very important either way you look at it. So I like this area here with 3K of my cash for Southern Energy.
All right, there you go. Pretty good, pretty good. Let's review. We've got Crude Energy on the Toronto Exchange, which is CR. We've got Cardinal Energy, which is CJ. And also on the Toronto, we got Ensign Energy Services at ESI. Southern Energy is on the Venture Exchange at SOU. We can't guarantee a damn thing, but we're going to tell you all this stuff anyway, and then hope you'll go out and do your own homework and your research, and also tell you that past performance does not guarantee future results, nor does...
I can't guarantee anything, but if you get a win, you owe us beer.
Yeah.
Or edibles.
Keep praise upon us. But that'll do it. We appreciate the fine effort also by Galen in his article that is somewhere just around outside the box that we're in right now. For Chris up in the penthouse, Michelle up there in the cocktail party, and for Ensign making his for Galen making his moonshine. Hey, they named the company.
I'm doing some drilling services over here.
If Ensign was making moonshine, it's a buy.
We'll see you next time on the Equity Guru Investor Roundtable. A ching ching.